Hi, Inderes TV viewers. Today I get the chance to interview Maggie Yi from PYN Elite, and we'll get an update on how the fund and the Vietnam stock market is doing. Welcome to the interview, Maggie.
Thank you very much, Sarah, for having me here.
Yeah, of course. Let's start with geopolitics.
Perfect.
Yeah, let's go straight into business. So, as we know, President Trump has proposed imposing 46% tariffs on Vietnam, and the negotiations on this are still ongoing. But at the same time, Trump's family business is investing 1.5 billion in a golf resort there. So, how do you interpret this contradiction? And could this investment signal maybe that the feared tariffs may end up being more moderate?
Um, yes, I think when we are talking about tariff, there are three things to consider. The first is the absolute tariff. Will it be 46% or significantly lower? The second is the relative tariff that will be imposed on Vietnam versus other countries that are key competitors for Vietnam in terms of export and attracting FDI. For example, India, Malaysia, and Thailand. In the current scheme of the reciprocal tariff, Vietnam is 20% higher than India and 10% higher than Thailand. So it's having a disadvantage over those two countries. And the third is the timing. When will we see the tariff deal to be concluded? Is it 1 month according to the 90-day pause? The 90-day pause will end in July, or will we see a little bit more uncertainty? So when I doing my research and discussion in Vietnam, I feel the vast majority industry participants is thinking about a tariff range between 20 to 25%, which is already significantly lower than 46%. And by my own analysis, currently I'm slightly more positive than most market participants. I'm thinking a likelihood of getting eventually 15% to 20% tariff range. So in my view, the objective for Vietnam is not to get rid of tariff completely. Tariff will be here to stay. But the key is Vietnam should seek fair treatment, that the tariff should not be higher than India or Thailand or too much higher. It should be equal compared with competitor countries. Here is my view. The first is on the US side, because currently Trump is proposing his one big beautiful bill, which is hopefully to be passed in second half of this year. This one big beautiful bill will cause 3 trillion extra deficit over next 10 years. That is 300 billion per year extra deficit. 400 billion per year missing revenue from tax cut. And he is looking at hopefully balance his fiscal budget through raising tariff revenue. And by my calculation, 10% universal tariff will mitigate the 300 billion extra deficit per year. But if he imposes a 15% tariff, that will mitigate 400 billion revenue loss per year. I think his administration is aiming at 15% universal tariff for every country. Some country would be higher, some country would be lower. And it's important for Vietnam to be as low as possible compared with its peers, which is maybe 15%, like the vast majority players. The second is that from the Vietnam point of view, Vietnam in the US is perceived as the place for Chinese goods to be transshipped to the US, or just the last stop of getting value added, then export to the US. Actually, the actual number is not the case. The transshipment value is much lower, but that's the perception. So Vietnam needs to try very hard to take away the perception. What Vietnam has been doing is cracking down the Chinese transshipment that US really don't like. And on top of that, what Vietnam has been doing is, like you said, the Eric Trump, he is involved with 1.5 billion hotel, a resort, golf resort in north part of Vietnam, and he actually got another 1 billion project in the heart of Ho Chi Minh City. It's going to be a 60-story Trump Tower. Apart from those, the Vietnamese government, they promised to buy agriculture products, Boeing aircraft, 50 of them, fighter jet, and LNG products. So all this, Vietnam is trying to do all this is to showing the US that Vietnam is the most eager, open, cooperative country that's on the negotiation table among the rest. Even with the US, Vietnam does not have much cards to play here. But I feel Vietnam is trying its best to get a fair tariff scheme compared with other countries. So I'm hoping, and I think Vietnam government is hoping that maybe 0% to 5% gap compared with the tariff imposed on Thailand or India. So that will be in my range of 15% to 20% tariff, but not higher. The Vietnamese government is trying to keep that competitive disadvantage as low as possible. And another thing that's happening in Vietnam is very interesting is the US companies that are doing business in Vietnam, they are lobbying government. So in yesterday, there was a Financial Times article. The Chamber of Commerce from the US that based in Vietnam is writing letter to the US said the result that Vietnam could have such big export to US is because Trump's policy is working, because Trump wants to bring supply chain outside of China, so they are moving to Vietnam. So it's wrong for the US government to punish Vietnam for their own policy because it's actually a good thing to do. So all these things, I feel like it's working for Vietnam government favor. So now I'm looking at a 15% to 20% range tariff, and I think it's an acceptable level. I have been talking with some business entrepreneurs in Vietnam. I remember my conversation with one fruit export business CFO. After the Liberation Day with the 46% tariff, he has been doing a lot of work. And his thought is if the tariff is 10%, it's very easy. If it's 20%, it's still manageable. If it's 30%, it's okay, but he and the partner need to share the cost. So I think 15 to 20%, it will be a good level for Vietnam. The only unclear thing is the time. Will it be clear in 1 month or it take longer? My view is the US-Vietnam trade deal will happen after US and China trade deal, but the deadline for US and China to reach some deal would be in August. So I'm anticipating some short-term uncertainty. Maybe they need to extend the 90-day pause a little bit longer. But I think eventually the outcome will be favorable for Vietnam. But the exact timing could face some uncertainty here.
That sounds good. Thanks so much for this great analysis on the topic. And let's really hope that it works out on Vietnam's favor. But
Yeah.
hey, let's jump into the Vietnam stock market's attractiveness.
Yeah.
The market is trading at a PS ratio of 1.3 and PE ratio of 11. So would you describe the Vietnam stock market right now as a value opportunity? And how do you see the valuation developing in the upcoming years?
You are very right. Currently, the forward PE ratio to 2025 earnings is 11 times. And for past 10 years, the average forward-looking PE ratio for the Vietnamese market is 14 times. Sometimes get as low as 9, sometimes as high as 20, but 14 is the average. So currently, we are 11% forward PE. It's not only below average, it's actually one standard deviation below average. I ran a data for all the past 10 years. Market trading at this valuation or lower is only 13% of the time. It means 87% of the time market trade at a higher valuation. So you ask me if it's a value opportunity, I would tell you the bad days are numbered. I think Vietnamese government will revert to its average, if not higher. What are the catalysts? First is that any positive negotiation outcomes with US and Vietnam deal. And the second is we hopefully to see a market upgrade by Fuji. The third is the foreign capital could enter into Vietnamese market again, because we have seen a little bit more than 2 years and a half foreign capital outflow from Vietnam stock market. I think the trend will be the opposite in the coming years. And then good GDP growth and good corporate earning numbers.
Yeah, well, talking about the GDP growth, the government has set a growth target of over 8% for 2025. So, how realistic is that, and what are the key enablers?
It's a very good question. 8% sounds very high, isn't it? So for past 10 years, every year, Vietnam government at the beginning of the year will set a target. So I have look at it. I wonder, Sarah, would you like to have a guess? How many years out of 10 years, how many times the Vietnam GDP is higher than government's target?
That's a really good question. I'm not even gonna guess.
But if 50% would be a pretty good chance, huh?
Yeah.
A pretty good record. So the actual is for past 10 years, 6 years, Vietnam exceed the target by an average of 1%. There was 1 year it's exactly right on target, and there 3 times it fell below target. That was year 2020, 2021, the COVID years, and 2023, which was truly a challenging year for Vietnam domestically, due to the aftermath of the real estate corporate bond. So currently it's a good track record. 7 out of 10, it's in
Yeah.
line above. So this year, at the beginning of the year, government said they want to do 8% GDP target, and after tariff, they reiterate they still commit to 8% GDP target. They break it down by quarter. Second quarter, third quarter, fourth quarter, they have an exact target, which second quarter is 8.2. The first quarter GDP growth 6.9. Well, according to sell-side analysts, they are forecasting this year the GDP growth could be somewhere between 6.5 to 7.5. But in May, because the government is speeding up the public investment, how much it has come up is a positive surprise for everyone. So I would leaning towards sell-side analyst forecast 6.5 to 7.5 to be realistic, but I leave room for any positive surprise because government now is doing whatever they can to boost the domestic GDP growth. And looking forward, I think it's important to know that the government set 8% GDP target for 2025, and at the same time, it set 10% GDP growth per year from 2026 to 2030. And by 2045, Vietnam aims to be a high-income country. And what are the key enablers over the long-term period? First is public investment will be playing a much bigger role. You see the headlines where all this infrastructure project is being approved and is getting kicked off. Toll roads, bridge, metro line, and even the high-speed railways is actively in discussion. The second is the Vietnamese government know they cannot do this alone. They need the private sector to help them. So what I see is that Vietnam is actively involved with the private enterprise, especially the big capable conglomerates, asking them to invest, asking them to develop the economy. And in return, the government will give them favorable policy, fast track project approval, and better access to funding. And apart from this, the Vietnamese focus on the investment into education. It waived all the tuition for public schools from grade 1 to high school, and Vietnamese government is prioritizing science, technology, innovation, infrastructure. So I would like to highlight to our investors, this is not a 1 year thing. This is a 10-year shift. We're in a different administration, and the administration style is very different compared with previous one. The current administration focus on economy. So the next 10 years, we will see a big shift in the administration's policy and their guidance to the national economy.
Yeah, that sounds good. Well, hey, let's jump into PYN Elite's portfolio and let's
Yes.
start with banks because that still makes up 47% of your portfolio.
Yeah.
So in your latest monthly review in May, the MB Bank was mentioned as the stock of the month, and
Yes.
MBB has had somewhat of a muted start to the year
Yes.
due to asset quality concerns and limited investor communication. But you increased MBB's portfolio weight from 9.5% to 12.5%. So, what gave you the conviction to raise your position at this time?
Right. I have described MB Bank, the share price is somewhat muted. Is At the time of my writing, MB's year-to-date return is 12%. It's actually still higher than average banking sector's return 4% and index return. It's just not up to my own expectation, especially given 49% earning growth. With a 49% earning growth and with the quality of MB Bank, it should have gone much more, but it hasn't. I think it's because investor is a little bit unsure how the asset quality will be in the coming years. And for year 2023, 2024, there are some quite how do I say, high profile borrowers that the investor is tracking closely. They were in a relatively poor situation 2023 and 2024. The first is property developer Nova Land. It over leveraged itself, but at the same time, they suffer from the project couldn't get approved. They couldn't start. They couldn't even sell the project. So last month, the government approved give legal clearance on one of its biggest project. So this project could do the pre-sale in third quarter. That's a big improvement for Nova Land. And MB Bank is a big lender to this project. So it's really greatly improved the asset quality that's to Nova Land. The second is a big the second borrower in question is a big player in renewable energy. This project investor suffered some legal bottlenecks in 2022 and 2023. So either they could not sell electricity or facing electricity payment delay. This year, the government is doing a lot of work on renewable energy sector. They are changing the electricity laws. They are changing the implementation plans. The law come much faster than people can follow it. It shows government's strong willingness to make the sector like growing again. So we see it's very good for this sector, and we see possible debottleneck for the renewable project that MBB is lending to. And the third is actually a big conglomerate. It's not listed. People don't know about their financials, but it's big in the tourism and resort business. So people have feared they probably suffered weakness and couldn't really recover when it was in 2022 and 2023. But this conglomerate this year, because they're capable, they are big. So they were also the chosen one by the government. The government gave them good policy, fast track project approval. So they are in good shape. So all these three high profile borrowers are getting better this year. So the asset quality outlook significantly improved. So yeah, that's the biggest conviction for us to raise the MBB's weight.
Okay, that's interesting. Well, what would you say after a couple of tough years for the banking sector, do we see some positive development and what are the drivers behind it?
I have asked this question to one deputy CEO of the bank we invested in. I just asked, how do you feel about this year? What's your biggest concern? And he actually said the economy is doing better, the lending business will doing better, but there is one big thing that he's really excited about is the resolution 42. Resolution 42 is that changing the laws that helping banks to recover their collateral under NPL. In previous law, every time a loan become NPL, actually bank can claim the collateral and sell the collateral, but the actual process is very lengthy. The bank need to go to the court to sue the default borrower first. Then after a lengthy process, then they claim the collateral, then they can sell to market. So this resolution 42, what it means is that as the moment the loan become NPL, the bank could claim the collateral and foreclosure it and then sell it to recover the loan loss. So that's the biggest thing that excites this bank management. And this law has been discussed in May by the National Assembly. It looks like they will vote and likely to pass it on 17th of June, so 1 week away. So that will be the biggest driver. And apart from this, I think the ongoing GDP growth, ongoing corporate earnings, economy recovery, real estate sector recovery will all be very good, positive for the bank stock.
That's great. Well, hey, let's jump into aviation sector next.
Yeah.
So, aviation currently makes up 17% of your portfolio with major positions in ACV and Vietnam Airlines. So, what makes you confident in the long-term growth trajectory of Vietnam's aviation sector?
The long-term growth for the aviation sector will be driven by the demand for the air travel, and mostly from one of the biggest demand will come from the tourism. In the investor letter that Patrick has provided the data comparison for Vietnam and Thailand. Vietnam welcome 18 million tourists per year. Thailand at its peak welcome 40 million tourists per year, so 2 times of Vietnam. And we have very good reason to believe Vietnam will catch up with Thailand, just because Vietnam really has a lot to offer. They have many different landscape and culture from north to south, and there are a lot of low-hanging fruit that Vietnam could grab, like better marketing, better promotion to grab to attract customers easily. And there are actually signs already that Vietnam is catching up with Thailand. I have some interesting data to share to our investor. For first 5 months, 2025, Vietnam's total tourist growth is 21%, but in Thailand, the total tourist growth is minus 3%. It's drop. And for both countries, the biggest customer group is from China. So the Chinese in Vietnam, they welcomed 2.4 million Chinese for first 5 months. That is a 47% year-on-year growth. It's a big growth, but things in Thailand is different. They welcomed 2 million Chinese tourists, already less than Vietnam, and that was a minus 40% year on year. It was a decline. So Thailand has its own problem, which I will not get into, but it shows that when tourists, especially in this region, when they are giving a thought of another travel destination after Thailand, the first thing coming to their mind is Vietnam. So I think this trend will continue. And Vietnamese government is looking at more things to support the long-term, the international arrival. They are looking at better visa policy. They are looking at 10 years golden visa or investor visa. They are actively doing airport upgrade. They are building better roads to connect to the popular tourism sites to make it convenient for the traveler. And they are also just building more new attractions.
Yeah, that sounds great.
Yeah.
Well, continuing on the aviation still, your fund has taken a contrarian view on HVN and added more to your position last August during the price weakness. So, could you tell us a little bit more on your view on the company?
Yeah, sure. We think Vietnam is in a very good sweet spot of high airfare, strong demand, low jet fuel cost. So structurally speaking, the earning from 2025 to 2027 will be higher than pre-pandemics. But the valuation, no matter you look at price to sales or EV to EBITDA, it's lower than pre-pandemic. So even with this current price level, it's still not fully priced in its future earning potential. And you actually correctly point out it's a contrarian view of us. Actually, I would like to share you a side story that our total our cost for the entire HVN Vietnam Airline portfolio, the cost is 21, but current market price is 39. So we made 80% gain for our investor in a little bit more than 1 year time frame. And what interesting is that we first bought 50% position in May, and then because it's rather illiquid, the price quickly went up, so we took a pause. Then in August, during its price weakness, we bought another 50% at cost of 21. Then at that time, if every investor in August 2024, everyone wants to buy FPT, that's the only darling stock that it's benefit from technology theme. It's a partner with NVIDIA. Everyone say buy FPT. Every sell-side broker, including analyst team. But Patrick resist the urge to buy FPT and he doubled down on Vietnam Airlines. If we were bought FPT, we will have a 15% loss by today, but we bought HVN, which is 80% gain. So the choice matters. It's a difference of 95% absolute gain. So this is a example that PYN and our portfolio manager Patrick, that he took contrarian view. He does not follow the crowd and make gains for our investor.
Yeah, that's a really good conviction to the thesis or the classic investor quote that goes around that you shouldn't follow the herd. So this is a good, really good example. Yeah, good. Well, hey, let's talk about brokers next. So
Yes.
the KRX trading platform was launched in May. That's great because I think I've done already several interviews with you guys, and I think it's always the launch is coming, it's coming, it's coming. But now it actually happened in May, and that is expected to
Yeah.
and the launch is expected to boost the market activity, and you also
Yes.
anticipate that the FTSE could upgrade Vietnam to emerging market status, so the EM status within the 10 months. So how significant are these developments for brokers and the market liquidity?
Sure. I will start with the emerging market upgrade by Fuji. KRX is not necessary for Fuji market upgrade. What they care the most is non-pre-funding solutions offered to the clients. And since Vietnam offered non-pre-funding solution end of last year, it has been working well. There are some feedback, but overall, I think when Fuji start to survey their own big clients, like we are talking about very big global asset managers here, they feel like they are okay with all the changes that Vietnam has been doing and the current non-pre-funding solution mechanism. So if they are okay, Fuji will listen their customer, and it's quite hopefully we will see an upgrade maybe this September, maybe 80% chance. If not, we will see it in 10 months. And we crunched some number. If the market is upgraded to emerging markets, it will attract 1 billion passive ETF flow immediately and 2.3 billion active net flow from active funds over the course of next 2 or 3 years. This, of course, that when foreign flow coming back is good for Vietnamese market price to earning back to its historical average. It will make the market liquidity much better. And the KRX. The KRX is not a prerequisite for emerging market upgrade, but it's the platform that will launch the CCP central counterparty will be launched in KRX.
Yeah, well, talking about the counterparty, what would be the potential impact of Vietnam establishing the central counterparty on market efficiency and the brokerage profitability?
Yes, I have heard a very good analogy. I will borrow I will borrow and use it here. So imagine KRX is like your iPhone, but with no apps. You got KRX, you could only do the basic stock trading and some future, that's it. And in future, we will install more apps on your iPhone. The apps is including short sale, daily trading, etc., etc., a lot of new products. So now we only have the iPhone. We don't have much apps there yet. We need to have the CCP to be in place. Once the CCP is in place, then we can install more apps. So what's the benefit for the CCP? So CCP itself that will improve the efficiency because CCP everyone settle with the central counterparty, but at current mechanism, I'm settling with you, Sarah, and Sarah, you are settling with someone else. It just increase the chance of error and the inefficiency. And another thing is when investing into Vietnam, we finally find ourselves in a situation that under current non-CCP transaction settlement, our information could be leaked by any people who want to take advantage of our information because it's obtainable by them. But under CCP, they will not see who is buying, who is selling. It's very fair for all market participants, especially for PYN Elite Fund, because whatever we buy, people get excited and want to front run us. If no one knows what we are doing, that's really good for our trades.
Yeah, definitely. That makes sense. And I love the iPhone and the app metaphor. Great. But hey, lastly, this is the thing I at least don't
Mhm.
always think about when I read about the broker stock. So they are known for their volatility and the short holding window. So how do
Yes.
you manage the risk reward profile in such a tactical position?
You are so right to say the brokers are volatile. They are volatile from two parts. The first is their business is volatile because market good and bad. Investor trade more or less, so it's a natural cycle. And the second is their valuation is volatile along with their business nature. It's so affected by investor sentiment, which is very headline driven. So broker on average the PB, we value broker with PB at a really bad time when people are really depressed, investors are really depressed, market is in a bear market, they can trade as low as 0.5 price to book. But in the super bull market, their price to book can go all the way to 4 times in previous cycle. So how we manage the risk, we manage both business risk and valuation risk. The easy one is valuation risk. We don't buy broker with a high price to book. So if the price to book is 0.5 to 4 times, we probably enter the position with a 1 times, 1.1 times book. And if it's a really good one, we okay to accept 2 times book. And the second is how we manage the business risk. How brokers can really make big loss usually come from two parts. First is margin lending. If there is very good risk management in place, they don't really need to suffer loss. But if the risk management is bad, for example, they lend to good clients too much, then they couldn't really, even selling the stock couldn't recover the loan, then it become a big loss. And another is investment. If they do some reckless investment or investing into related party business, then it will make loss for the brokers. We carefully examine all the brokers' margin lending book situation, how they manage the process, what's their style for their prop book investment. So we know who we trust more and who we probably will be a little bit more cautious. And there is a very interesting thing that this year, Vietnam government is trying to do some pilot change on the cryptocurrency part. So they are looking to build local crypto exchange. They want to give the license to maybe up to 5 market participants. And brokers in Vietnam are actively looking at the space. If some of our portfolio holdings get a license of running the crypto exchange, it will be a very, very big boost for their valuation.
Yeah, for sure.
Yeah.
Yeah, makes sense. Thanks so much for sharing your insight on this as well. And also, thank you for the interview, Maggie. It's always a big pleasure talking to you, and I wish you a great summer.
It's my pleasure to talk with you and share my views and our funds updates to your audience.